Hey, what's up, everybody? It is Tuesday, August 23rd. Quiet day. Another down close, but not by much. Dow is down. NASDAQ, S&P, just marginally. So yesterday, I just checked the numbers. Yesterday actually was a pretty significant net drain, fiscal net drain, about 14 billion. That was the third net drain of the month, but it was by far the biggest. So we had one on August 8th for like 6.5 billion. We had one on August 12th for 1.8 billion. And yesterday was like 13.8, almost 14 billion. So that explains, at least to me, some of the weakness in the market yesterday. Like it probably inhibited or just kept any kind of buying power down. So the sellers had the advantage, and we also had the the rate worries and the dollar and all that stuff. So, but anyway, yesterday was a net drain of almost 14 billion. That's big for, just like a regular fiscal day. Tomorrow we will get a Social Security. So, the Social Security payment, that's the last one this month. That's coming tomorrow. That'll completely reverse the drain of yesterday. Typically on these Social Security payment days, we have a net positive flow of, between 20 to 30 billion, like 24 billion. So that'll make up for it. And typically the pattern has been we see market rallies on the Social Security payment days. Sometimes they come like a day later. So that could mean Thursday. Now, today was the beginning of the Jackson Hole Symposium, so we're going to have a bunch of speakers. Maybe some speaking today. I don't know. I don't follow it really. I just know that Powell is going to talk on Friday. Now, I don't know what he's going to talk about. All I know is that because the investment world is inhabited like 100% by monetarist zombies. They're going to hang on every word, and he might come out hawkish. I've been reading some things where he's expected to say or lay out a scenario of now kind of scaling back these rate hikes. So maybe the monetarists will think that's bullish. I don't know. I don't really pay attention to that. I pay attention to the fiscal situation, and for me, that's fine for now. But I repeat, September 15th, quarterly corporate tax payment, and so that's real, okay? That's real. One of the things I wanted to mention yesterday, but I forgot because there were a lot of things that I was talking about yesterday, but one of the things I wanted to talk about was the dollar. And do you know right now what is happening is de-dollarization. De-dollarization. Now, we've heard that term. I've even used that term for a number of years, how because of the risk in holding dollars, and it has gotten greater, this risk, ever since the Russia invasion and the freezing of assets, and then the sanctions, not just on Russia, but countries that maybe side with Russia. And the world recognizes, now this is not just something that happened starting February 24th with the invasion. This was an ongoing thing, and I had been talking about this for a long time. I said that more and more, as the rest of the world sees that there's risk in holding the dollar, that risk being, like it's a geopolitical risk that the United States could sanction you, they could freeze assets, they could block your ability to transact in a dollar-based global financial system. All these things will lead to, nations seeking alternatives. Now, that was interpreted, most people interpreted that to mean, oh, that there's going to be massive dollar selling. I mean, you still have these people out there, so the dollar's going to collapse and blah, blah, blah. So let me explain this to you, because it's really grossly misunderstood. The only way for the rest of the world to rid themselves of dollars, or to reduce their dollars, is to exchange those dollars for goods and services produced in the United States, or to invest, like, if you want to use that term, capital flows. I don't use that because it doesn't really flow, but, to set up shop in the United States. And we are seeing that happen with the rise, and it's really been astonishing. And I've been talking about, I spoke about this yesterday, that even I had no clue, zero thought in my mind that we were going to see U.S. oil exports, crude exports at 5 million barrels a day. I mean, that is, up to the point of Trump. Before Trump got elected, it was illegal. Okay, crude oil exports were banned in the United States. You weren't allowed to do it. Maybe just, certain situations, but basically it was banned. And then Trump came in, he lifted the ban, and it slowly started to expand. Exports started to expand, and now the United States is a net exporter of petroleum, crude and refined products combined. And crude, 5 million barrels a day. I mean, it's huge. So what's happening now, and the acceleration in this trend has really got started with the Russia invasion of Ukraine and the sanctions that are limiting or inhibiting the ability of Russia to sell its energy and its oil. So the United States has stepped in as a major supplier. And the world is buying it. Countries are buying our oil. And that is leading to two things. Number one, demand for the dollar. So the dollar is getting strong based on the U.S. position as a net exporter of petroleum. But here is the interesting thing, or here is the part where a lot of people are missing it. I'm the only one who seems to be talking about this, is that this is de-dollarization. This is the world exchanging. Let me back up for a second, because like when people were saying, oh, they're going to sell the dollars. Look, if one country sells their dollars, let's say China wanted to rid all of its dollar holdings, and it's sold in the Forex market or whatever. And let's say Japan bought the dollars, or the UK bought the dollars, or some other country, or a bunch of other countries stepped in. The dollar doesn't go away. It just goes through a change of ownership. In order to reduce dollar holdings globally by the rest of the world, there's only one way. They have to be given back to the United States. It's like, let's say, the economy is full of junk cars. A whole bunch of junk cars have been sold by X manufacturer. They're all lemons, right? And everybody wants to get rid of these lemons. We want to take them out of circulation. So like if I sell my lemon junk car to my neighbor, the junk car is still here. It's still in the economy. The only way we get rid of the junk car is by giving it back to where it came from, the manufacturer. All right? Remember the cash for clunkers thing that happened in 2008 when the government was subsidizing this is when we were going through the great financial crash, and the government wanted to subsidize the purchase of automobiles, to spur the economy. We had the cash for clunkers program. It took out, he took out a lot of nice cars. I have a friend who's a car dealer, and he's like, Mike, we were destroying like beautiful Corvettes and these, these big V8 engines. That's what the cash for clunkers were for. Those were not lemons. We were just like taking them out. So yeah, the only way for the rest of the world to get rid of their dollars is to send them back to the United States, and they're doing just that. And that they're using the dollars to buy oil. Now, the interesting thing about this, or I should say the irony of this, is that this is going to reduce the trade deficit. Number one, it's bullish for the dollar, okay? It's taking these dollars out of circulation. It's not going from country A to country B. It's going from country A right back to the source, the United States. It's out. It's out of global circulation. And number two, it is helping to shrink, I said this yesterday, it's helping to shrink the U.S. trade deficit and current account deficit. And the trade deficit and current account deficit, because they are deficits, because they're a component of GDP, of how we calculate the economy, they are always a subtraction to GDP because they're perennially always in deficit. But when that deficit shrinks, the subtraction becomes smaller. So let's say you had a GDP of 3.5%, but you have to take off, a 0.5% or 1% because net exports, the deficit is subtracting 1%. Now you get to leave that back in there. So you get higher economic growth the way it's measured. In other words, the income stays in the United States. It doesn't fly out to the foreign sector. So we are experiencing de-dollarization. There's not going to be, some big giant dollar crash, at least not in the near term at all, while this is going on. And I don't see, as long as this war stays on and as long as these sanctions stay in place against Russia, then the United States is going to continue to be a major, major global supplier of energy. We're going to be a net exporter. And that's bullish for the dollar. And by the way, just on a side note, what does this say to Americans? I mean, all we've been hearing about since Trump is, energy independence. We've achieved energy independence. America is energy independent, right? We opened up the Alaska lands, these wilderness areas and places out west to drilling and the fracking and everything else. At risk, at environmental risk or whatever. Okay, I'm editorializing here now. But anyway, supposedly energy independence. But then what do? We take that bounty that belongs to us and we're sending it off to the foreign sectors. Foreigners are enjoying our bounty. We're literally subsidizing the purchase of oil for Europeans, for Asians, for people from the rest of the world. Who tells me, you don't hear it that way, but that's exactly what's happening. And now the SPR, the Strategic Petroleum Reserve, which is our, a strategic supply in case of who knows what, war or whatever, we're selling that off. And that's being exported. So, I mean, when you think about it, it's a major, major screw job because we as consumers here, a lot of people here have trouble now. They can't afford to buy fuel. Whether it's like putting their gas in their cars or wintertime, we'll be talking about heating homes. But we're literally subsidizing foreigners for the purchase of our oil. That's what policy is right now. Now, that could be changed, of course. Biden could say, hey, I'm going to put a ban on it, but he's not. And not only is he not putting a ban on it, he's allowing our strategic reserve to get exported too. So this is de-dollar. There are two things going on here. The number one is the export of our, that's our bounty. That's it was for us. No more. And the other thing that's going on is de-dollarization. It is happening, but the irony is it's making the dollar go up, not go down. And that's going to remain as long as we net export. All right, and it has nothing to do with monetary policy right now. People say, well, Mike, I thought you said that raising rates is bearish. It is. You could see that. You could see that in Turkey. You could see that in Argentina. You could see that in all these countries where they raise rate. But here, not just here. There's other factors that go into what influences exchange rates. Yes, monetary policy is one thing, but so is fiscal policy, so is your trade balance. And by the way, fiscal policy, we've seen a 1.6 trillion shrinkage in the deficit. That is dollars that have been sucked out of the system. So shortage or a tighter, condition for the dollar. So all that stuff has to be taken into consideration too. Anyway, that's it for today, folks. If you want to get a copy of my weekly report, MMT Trader, remember I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT, and I use that to invest and trade in the financial markets. Go to my website, pitbulleconomics.com, sign up for a 30-day free trial. See you tomorrow. Bye.